I think, in any way being diminished in terms of its monetary character over time. But, I just think people have the sense of urgency and needing to be there right now.
What are you seeing in the sector now?
Despair, pessimism, undervaluation, irrational valuation. Big companies using $1,200 to gold to do budgeting, distributing capital, repairing their balance sheets, and talking up copper or anything other than what they're actually in the business to do, produce gold. Just because it's been such a brutal year. So the GDXJ is down 20+% this year. S&P is up, high teens. Commodity index is up 30%. So it's the perfect environment for gold and silver mining, and it just hasn't worked.
Yeah, that's curious, isn't it? It's funny. I was chatting with a few friends who were at the few shows in Colorado in September, Beaver Creek, Denver Gold, and all this. And they said very similar things. I couldn't make it down this year, but they said sentiment was at this shocking low because, if you look at the macro setup, it's quite favorable, you would think, towards gold market, but the market's not performing as maybe historic gold investors think it should or whatever. But what do you point to, Sean? As you said, it's been a tough year, but why do you think it's been such a challenge for gold miners to raise interest from investors?
Well, I would have thought, just in an effort to be very honest, that given that the combination of fiscal and monetary policy that we've had over the last year and a half, that gold and gold mining stocks would have done much better. So I certainly didn't see this coming. I certainly didn't see these kind of declines out of last summer coming. Where not only is gold down, but the stocks are down. Now it's 20% year to date, but compounding that with the highs from last summer, you're down almost by a third, off the peaks from last summer in a lot of the equities. So why? I think basically it's this, we're in the seductive phase of inflation, where inflation seems like it's not that bad. It seems like it's going to help us with growth. It doesn't really seem like currency debasement yet, but I think that's pretty clearly the path we're on. And the farther we get down that path and the more impotent central banks look, the better gold looks. And it's just, it's taken longer than I would have thought for markets, and the gold market in particular, to discount that future.
Right. Yeah, it's funny. I see all the same things you're seeing. And honestly, Sean, it's just made me more and more excited about my gold portfolio. And, it's not a great looking portfolio right now. I'm down on probably 90% of my gold positions. And maybe this is just like maturity myself as an investor over my investor journey. But for the first time in my memory, I'm super excited to be averaging down in a handful of what I consider to be great names, management teams I love, balance sheets that are cleaner or healthier than they've been that I've seen before. And this decline in the market just adds to my excitement, because it's really hard right now to find any asset class that's undervalued, right? So if you're trying to allocate capital somewhere and you want to avoid anything inflated, I find it quite tough to discover anything. But what do you think about that, other than precious metal stocks?
Yeah, so oil and gas, has now had a good run. I'd say the extreme of pessimism in that sector was maybe even worse than it was in the gold sector at the lows going back a year. And you still have, that's a very, you have a lot of ways in which that investment has been politicized that creates a lot of inefficiency. Similar to what you see in gold, I think it's today, I think it's a little more balanced than what you see in gold and silver mining. But it's certainly one of the few spaces, gold and silver mining, where you can find companies with great balance sheets, good assets, aligned managements, aligned directors, where you're going to generate not just a 10% free cash flow yield, but in the case of a number of the juniors, you can really find 20+% free cash flow yield at $1,800 gold. And that's kind of, that's shocking. It's not asking you to invest around higher gold prices. It's not asking you to invest around people that have dodgy backgrounds. It's just nobody cares. And that's the opportunity. That's the same reason why I think I'm excited like you are to invest in the space at this point.
So then, therefore, at Equinox right now, are you guys in like full-blown hunting mode? Are you aggressively looking for opportunities? Where are you guys at?
Yeah, I think, really what we've been doing for the year to date has been adding, in particular, adding in some of the juniors. So we bought a number of the seniors earlier this year for the first time. Really, in my career, some of the seniors were trading at meaningful discounts to NAV. They still are, not all of them, but a number of them. They have, by definition, a number of world-class assets. Now, some of the seniors have real dividend yields, and then you have a lot of liquidity. You have diversification. You have a lot of benefits in the seniors that you don't have in the juniors. Some of those companies have held up better year to date. And some of the juniors, you've just seen the pricing has been much more uneven. And so the market's just not responding to better news. It's not responding to assets coming on time, on budget in the way that you would expect. And so there's just, I see more pockets of opportunity in the junior space, and particularly in the junior producers. And that's really where we've been doing most of the work, and we've been adding recently.
Got it. Okay. Now, do you think there's more distractions right now than there used to be for money allocation? A traditional, historically, a traditional gold investor looking for hedges against inflation, they have a few options, but there's more today. If you look at assets like maybe just cryptocurrency as a major draw on people's attention and therefore their wallets. Do you factor that into your analysis of why gold might not be getting the lift that otherwise you'd expect in this environment?
I think it's certainly a factor, right? I think most investors see gold as a hedge, but gold is maybe not the only hedge, and gold certainly is the hedge that hasn't worked. And so, even though it's worked historically, given that it's not working now, and I think more importantly, given that they're still making 15, 20% in the S&P, why exactly are those allocators going to be moving money? And I think that's the big distinction between, say, now and what you saw in the 70s, right? You don't have stocks going sideways for a decade. Instead, you have stocks compounding at, mid to high teens every year. Mm. So there's just not the impetus for people, even if they agree with us theoretically in terms of the opportunity to actually make the shift. And so I think that's been a bigger factor than the distraction. I think if you think about it bigger picture, this is a $14 trillion asset class if you're talking about gold. This is not just owned by central banks, but central banks have been the largest consistent buyers over the last decade of gold. So this is not an asset class that's going away. And if you look at the statements that central banks have been putting out around with their asset purchases, it kind of corroborates everything that we know to be true about gold. So it's not an asset that is, I think, in any way being diminished in terms of its monetary character over time. But, I just think people have the sense of urgency and needing to be there right now.
Sure. Yeah, it's not an exciting asset class for the last 12 months. That's for sure.